Hello guys. We'll be seeing together if we're gonna crack the market, see the market crack, if I can say, this year or maybe in 2024. I don't know the future for sure, but I give you something. Well, you can see the Nasdaq at the moment. We basically on a bull run since the low we've seen last September, something like that. On a yearly basis, we all know that we're quite of the 88 with the 88 like all times level, almost reaching there. That's something definitely that sounds interesting. When we look in details at the chart, we can see that we are coming into a zone, basically the shorting zone where people are trying to prepare their shorts in a lot of cases. So what does it look like when we look at the chart? Let's have a look together. I've set up the Fibonacci's. You can see the classic 200 days average. So the RSI is quite in a up trend, and we can see that we're reaching our last Fibonacci stopping zone, short reloading zone. So that's something we definitely want to look at. On the long-term basis, we can see that we are almost at the middle, at the 0.5 between that 2 points. So I've set up this little box because that is a range for sure for our current market. If we look at the basically the other indicators we have here, we will be able to see that when the Fed will announce next rate hike, because it will definitely come in 25 days. The next meeting, the next FOMC meeting on the 26th of July, we definitely gonna see a hike. Well, that's what the probability says. We can see 87% of people think that we're gonna have higher rates. It's actually something that has changed a lot since 1 month. You can see 1 month ago we were at 45% for a hike, and 46% for the same amount of the same rates than today. Why? We can definitely think of last numbers. For example, last week we've seen 2% of final GDP, with the forecast of 1.4%, which is definitely something bullish, and the inflation is not looking to go down. On the CB consumer confidence, we can also see the 109, rather than we almost 6 points higher than the forecast is quite high. So we definitely want to look at this. What I love to do is to, of course, look at the 10 to 2 year treasury chart. We know that this is a great indicator that allows us on a long-term basis, if I can say, to have a good idea of a possible crack. I was saying 2023. Are we going to see this in 6 months? I don't know, but we have the parameters that are saying that it could happen between Q4 2023 and Q1, actually. So this quarter is is quite bullish. I won't lie, because we kind of never seen, except in the 80s, a crack during the 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 negative constant. So I would I would guess on November, December until February 2024, we will be in extremely high tension market, and especially if we come back to our rate hike, um, it seems that the Fed is looking to start going down on the rate cutting rate starting January. Actually, we can see even in January it looks like current rate, current next rate, not current, because currently we are here, so it would mean that will still be a little higher than at the moment, and a normal back to normal, like to 2 days rate, if I can say, would be in March meeting. So we've seen some change in the market these last days. That's something that we definitely want to look at on a long-term basis. This is the chart I want you to look at. We'll finish on that chart, because that's something we've never seen in the history. We can take back, for example, the crisis in the 70s and all the 70s. Let's look at that. We can see that basically the money supply is still increasing. Like we had the two cracks, the two petrol cracks, but it's still increasing. So that's something we've never seen before. Something like we are seeing today. We definitely can see a start of decrease of the money supply since last March 2022. So it's been 1 year now that we are below the 21.7 trillion. We are now at around 20.8 trillion. So what does it mean? I will not start an economic class at the moment, since it's almost the end of the video, but you know what it means when money is lacking. We're going to see treasury problems. Companies will start failing. We are already seen some moves this first semester this year. I can see a bump. We can see that it's bumping back, if I can say, this last month. We'll see in the next few months if we go back to the increasing pattern, or if we will see again a decrease in the money supply. But I really want to insist on the point that we've never seen that before. A decrease in money supply is something extreme, where the companies and the economic system might be suffocating because lacking of money, which is the blood of the air, I would say, because I said suffocating, the air of the economy. I will end the video on that. We'll keep a look on the, of course, next results of S&P that will be for sure influenced by next week FOMC minutes, sorry, because we expect a tighter approach, like we've seen in last Powell's speech, saying that it will increase the rate for next FOMC meeting. So next week we're gonna see that. We also have the week after the CPI, and at the end of the month, on the 26th, the federal fund rate meeting. We'll see what Powell says after that to know what he's looking at for for the next rate hike in September, where the market expect actually Powell to stay at the same rate. So basically between 525 and 550. So I will end up this year. I guess we see each other next week. Was a pleasure to talk to you in my first video. I hope there will be a few views. Well, talk to you guys. Wish you safe trading, and we'll see you together next week. Bye bye.